This video is brought to you by togetherbudget.com. Understanding your risk tolerance is crucial in investing. It's the amount of risk you're willing to take on to achieve your financial goals. Think of it like a seesaw, as one side, the Potten factor, as one side, Potten factors goes up. The other goes down. Investment horizon refers to the time frame you have before needing your money. It's how long you can afford to ride out market fluctuations without dipping into your investments. When considering your risk tolerance and investment horizon together, you'll want to align them with a suitable investment strategy. This ensures that your portfolio is balanced and aligned with your financial objectives. Stocks give you ownership in companies, allowing you to participate in their growth and profits. You can buy stocks through stock exchanges or online platforms. Bonds, also known as fixed income securities, offer regular interest payments and return of principal at maturity. They are considered a lower risk investment. Exchange traded funds, for ETFs, are baskets of securities that track a particular index or sector. They offer diversification and flexibility, making them an attractive option for investors. And mutual funds pool money from investors to invest in a variety of assets. They offer professional management and diversification, making them suitable for those new to investing. Real estate investment trusts, and allow individuals to invest in real estate without directly owning physical properties. And this, they offer a way to diversify your portfolio and generate rental income